Hello everyone, welcome to EduTap and welcome to today's Finance 360-degree session. In today's session, we are going to discuss a very important RBI notification, a very important finance current affair that is very important from the exam point of view. See, the first flagship publication has been released by the CAFRAL, and this is a independent body that is set up by the Reserve Bank of India. So first we need to have the complete clarity about the CAFRAL, and then we also need to have the basic understanding of this first flagship report that has been released by the CAFRAL. So let's have the complete clarity today, and I hope you know that in the RBI Grade B and the NABARD Grade A, directly the themes can be asked for the report, and this is also important from the SEBI Grade A point of view. The themes of the report can be asked, as well as the CAFRAL in itself is very important. So now, before starting with the session, do subscribe to our YouTube channel and do join our Telegram channel for the PDF of this session. So starting with the Finance Current Affair, the finance news article that is regarding the first flagship publication that has been released of the CAFRAL with the title India Finance Report 2023. This was released by Shri Shaktikanta Das, the Governor of the Reserve Bank of India. The CAFRAL, it is a independent body that is set up by the Reserve Bank of India, and it started working, it was operational from January 2011. Okay, CAFRAL is a Center for Advanced Financial Research and Learning, and it has released its first flagship publication, its first flagship report, that is the India Finance Report of 2023, with the theme Connecting the Last Mile, the Non-Banking Financial Companies in India. Now, I hope you understand that the banks, even though we have lots of branches, we have lots of banks, still the banks are limited in number as compared to the population that we have, as compared to the length and width of the country that we have. As per the vast country that we have, the banks are in limited number. So we required the non-banking financial companies to reach to the last mile of the country and to approach the last mile of the country, so that new products, the financial services can be reached to the last mile of the country, to the length and breadth of the country. So we will understand more about this, that what is this connecting the last mile and everything. But before that, before going forward with this report, first let's understand this CAFRAL. So about CAFRAL, this is the Center for Advanced Financial Research and Learning. So India started focusing on research and learning. As we are having more of the greater role in the global economy. We are having the greater role in the global aspect. So the Reserve Bank of India set up an independent body, that is the Center for Advanced Financial Research and Learning, in the backdrop of India's evolving and greater role in the global economy, in the financial services center, and its position in various international fora. So CAFRAL seeks to develop into a world-class global institution for research and learning in banking and finance, and it focuses on research and learning in finance, in macroeconomics, and in public policy, so that more of the research and the learning can be done, so that better methods of financial products, financial services, better research can be happening on the macroeconomics and the public policy. Okay, so I hope you understand the basic idea of the CAFRAL and why it was set up for the research and learning to happen more in the finance, macroeconomics and public policy arenas. Okay, so now the CAFRAL is a not-for-profit organization. It became operational in January 2011. It is an independent body that was set up by the Reserve Bank of India to promote the research and learning in the banking and finance. Okay, the Governor of the Reserve Bank of India is the Chairman of the Governing Council of CAFRAL. So you have to remember that who is the Chairman of the Governing Council of CAFRAL? That is the Governor of the Reserve Bank of India. The mission of CAFRAL is to evolve as a global center for excellence for policy research and advanced learning in banking and finance, and so that more of the advancement can happen in the financial aspect, more of the advancement and the development can happen in the policy aspect and the macroeconomic aspect. Okay, now coming back to the report, I hope you have got the brief understanding of the CAFRAL. Now coming to the flagship report of the CAFRAL, that is the India Finance Report 2023. So IFR 2023 focuses on evolving non-banking financial sector as its theme. So that's why there is the theme connecting the last mile non-banking financial sector. And it studies the financial inclusion, rapid digitization that is happening in our country, the implications of the rapid digitization and emerging stresses in the non-banking financial sector. So this is all that is studied under the India Finance Report 2023. Now you have to understand that it was after the global financial crisis that arose in 2007-2008 from the US, and that spread to the various nations of the world. So after the global financial crisis, there was the rapid advancement, the rapid development of the NBFCs that happened in our country. The NBFCs started rapidly growing into our country, and this led to the more of the financial products, more of the financial services, the new financial products and new financial services, because the NBFCs, they are of different kinds and they provide different kinds of financial products and financial services. So these financial services, financial products started reaching to the far off areas of the country, to the length and breadth of the country, because the banks, they had the strongholds over the cities. So the NBFC couldn't develop much in the cities at the start. So they started developing in suburban areas, they started developing in the small towns, they started developing in such areas where the banks were not present to get and capture that market. So you can understand that the NBFCs made the financial products and the financial services reach to those areas where the banks were not having the stronghold, and this led to the connection in the last mile for the financial services and the financial products. And the NBFCs are very important for any country as they cater to the needs of the customers. So NBFCs in India grew rapidly after the global financial crisis, albeit there was the disruption that came by due to different shocks and the systemic spillovers that was happening in 2018-2019. But still, the consolidation in the sector ensured that the market forces played out, and weaker NBFCs, they had to leave the market. But you can understand that the stronger NBFCs were present in the market. They were able to work in the market and continuously expand in the market. So when COVID-19 pandemic came, the stronger NBFCs were present, which were able to maintain very good fundamentals, which were able to sustain any kind of harsh environment, any kind of spillover that was happening due to the COVID-19, due to the Russia-Ukraine war. The problems that were coming, that was not affecting the NBFCs much due to the strong fundamentals of the NBFCs. So NBFCs, consequently, the sector was relatively more robust entering the COVID-19 pandemic, allowing the NBFCs to weather any kind of shocks better, and due to which you can understand that NBFC had very good fundamentals in our country. Even the banks had very good fundamental in our country, so they were able to handle the situation way better, and our banks were not falling down. Our NBFCs were not falling down even in the COVID situation, even in the Russia-Ukraine situation. In many other countries, in even the advanced countries, there were the crises that the banks were facing, but not our country, because the banks and the NBFC had very good fundamentals. Okay, they were keeping the higher capital against the risk-weighted asset. The asset quality was improving, and the non-performing assets were decreasing. So you can understand, like, we had good fundamentals. Our asset quality was improved. It was good. Even in the COVID situation, our asset quality was actually improving. The CRAR on average, it was very high than what was minimally required. So we are going to understand and we will see the data, but I hope you can understand that our fundamentals were very good. Since then, the sector has emerged stronger with improved liquidity, capital position, better asset quality and higher profitability. So this is the basic idea of the report. The report focuses on the NBFCs, and the NBFCs are important for our country especially because in the far off areas, see, the banks are, even if they are in lakhs in number, still it will not be enough. Our country will require more and more and more banks. Our country will require more and more NBFCs, so that they can reach to the people of the country, and all the people of the country can access the financial products and the financial services. So the NBFCs has played a major role in that area, and they are bringing out new products, they are bringing out new services to even help the customers more. So now coming to the structure. So here we will see the non-banking financial institutions. So there are the All India financial institutions that are 5 in our country. So we have 5 All India financial institutions that I hope you are aware about. It is NABARD, SEBI, Exim Bank, NHB and the NABFID. Then there are the non-banking financial companies. There are the non-banking financial companies that are deposit taking, they can take the deposit from the public, and that's why they are important, because they are taking the public money, they are taking the public deposits. Then there are the non-banking, they are the NBFCs that are not deposit taking. They are divided into two parts: systematically important, systematically important, and not systematically important. Okay, so systematically important NBFCs that are not deposit taking, the NBFCs not deposit taking are classified into systemically important if asset size exceeds rupees 500 crore. See, the NBFCs that are deposit taking, they are important because they are taking the deposit of the public. If they are failing down, that means the public's money is not reaching to them and the public is losing the trust in the financial system of our country. So that's why the Reserve Bank of India has to look after the NBFCs that are deposit taking more, as well as there are the systemically important NBFCs that are not deposit taking, because these are the big NBFCs. These are the big NBFCs which affect the economy around them, which affect the financial structure and financial system around them. Then there are the other NBFCs not deposit taking, which are the small NBFCs not deposit taking. They are not systemically important. Okay. Here the numbers are also written that there are the 49 NBFCs that are deposit taking. There are 9,467 NBFCs that are not deposit taking. Out of these 9,467, 415 are systemically important NBFCs not deposit taking. Then there are the asset reconstruction companies, housing finance companies. There are the primary dealers, the bank primary dealers, and the standalone primary dealers. So I hope you understand the structure of the non-banking financial institutions. This structure has been given in the report, and I wanted to share this with you so that you have the clarity that there are different kinds of BFIs, that is the non-banking financial institutions, and the NBFCs are a part of non-banking financial institutions. Okay. Coming to the type of NBFCs, now you have understood, like in the previous session only we understood about the NBFC that are account aggregator. Then there are the NBFC that are NBFC MFI is the microfinance institution. So there are different types of NBFC that cater to different dimensions and different needs of the people. So here there is the types of NBFC, here the activity is written, and it is very easy. Just going through this you will be able to understand that okay, this NBFC is engaged in this activity. So investment and credit company, that means it is engaged in investment and credit, that means it is engaged in the activities involve lending and investment. NBFC infrastructure finance company, this is the company that is involved in lending of infrastructure loans. Infrastructure finance company means that it is providing the finance, it is providing the lending, it is providing the loans for the infrastructure. Core investment company, so it is the company that is doing the investment. So core investment company, the activity involves the investment in equity shares, preference shares, debt or loans of group companies. NBFC infrastructure debt fund, so it facilitates the flow of long-term debt to infrastructure projects. Microfinance institution, micro means small loans or small finance, so making collateral free small ticket loans to small borrowers to economically disadvantaged groups. So here the types of NBFCs are written, here the activities are written. So I hope you will be able to understand that there are different types of NBFCs that are engaged in different activities. Okay, so this is more of static in nature, so I just wanted to provide you some examples. You can easily read it and you can understand it. There is nothing much complicated that is provided here. Okay, so now moving forward, so coming to the CRAR. See, the CRAR is capital to risk weighted asset ratio. Okay, so asset for the NBFC is the loan that the NBFC is providing, for which the NBFCs are earning the interest, or the money that the NBFCs are providing, for which the NBFCs are earning some returns. So that is the asset. Now the asset or the loans, they have risk attached. If the loan is given to government, let's say there is only 2% risk or 0% risk. If the loan is given to some infrastructure company, then there is 10% risk. If the loan is given to some other entity, there is 5% risk. So with the assets, there are the risk that is attached. So that's why the assets are risk weighted. Okay. So let's say the CRAR is 15%. This is the RBI has said that minimum CRAR that the NBFCs have to keep is 15%. That means if they have the risk weighted asset of 100 rupees, then they have to keep the capital with themselves worth rupees 15. So that is capital to risk weighted asset, so that this capital can help them in the troublesome situation, in any kind of disruption that is happening in their activity, or any kind of distress that is coming. This capital that they are keeping, this will help them to get out of that situation. So the minimum threshold that is kept by RBI is 15%. 15% is the CRAR, that the capital against the risk weighted asset ratio. But you can see that in the COVID situation, even after the COVID situation, you can understand that the NBFCs are keeping the CRAR way above the threshold limit. Like the NBFCs of, we can understand that they can keep 15%, 15.5%. No, it's not like that they are near to the threshold. They are keeping way more capital because they know that the capital is important with themselves to get out of any kind of distress situation. So here you can understand that by 2022 they were keeping 27.6% of the capital to risk weighted asset ratio on average. This much of the capital they are keeping with themselves to get out of any kind of bad situation, and that is a very good fundamental that the NBFCs are keeping with themselves. A very good fundamentals the NBFCs are having, because if they keep the high CRAR, they can get out of the bad situation. Okay, so this is a good situation for our country, that we are our NBFCs are intelligent enough that they are keeping good capital against the risk weighted asset, so that they can get out of any kind of troublesome situation. Now the asset quality. Asset means the loans that the NBFCs are giving, for which the NBFCs are earning the interest. Now if the loans are not coming back to NBFC, the borrower is saying that I don't have money now, I cannot pay now. So this loan is becoming non-performing asset. You can see that as compared to 2021, in 2022 the gross non-performing asset, that means bad assets. Bad assets are the assets that are not coming back, that are the non-performing assets. So bad assets, that is non-performing assets, are decreasing. The bad assets were in 2021, the gross non-performing assets, the bad assets were 6%, which have decreased to 5.8%. So asset quality has improved. Bad assets have decreased, the non-performing asset has decreased, that means asset quality has increased. Net non-performing asset, here you can see that net non-performing asset has also decreased. That means asset quality has increased. When non-performing assets are decreasing, that means the bad assets are decreasing, that means asset quality is increasing, and this is also showing good fundamentals for the NBFCs. So this was all for today. So I tried to give you the important points regarding the NBFCs from the report. It is a very lengthy report, and if you want me to cover the complete report, comment down below. I will see and I will cover this report for you, but I want this report to be covered near to the examination. If this report is in the news, then only it will be more relevant. For now, you only needed to understand the situation of the NBFCs, what the report had to say regarding the NBFCs, as well as what is the CAFRAL is. Okay, so I have provided you the basic idea of the report of the CAFRAL, as well as I have provided you the important points from the NBFC's point of view. If you want the complete coverage of the report, you can comment down below. I will bring the complete coverage of the report, but for now this was the important things that I wanted to provide to you, and kindly try to answer this question. Very easy for you all. This is the first question, and this is the second question where you have to tell the theme of the report. Okay, if you want the complete coverage of the report, you can comment down below, as well as comment down below the answers of these questions. So now there is a big announcement from EduTap that we have brought for you the comprehensive guidebook for RBI, NABARD and SEBI, so that through a single guidebook you can get the complete coverage of the syllabus regarding the examination, the sources from where to prepare, as well as the previous year questions are also provided in this guidebook, and they are absolutely free of cost to save your time, to save your efforts, and you can easily download these guidebooks. The link is provided in the description box below. So thank you very much. If you have any query, you can call us here, you can mail us here, or you can comment down below if you have any query. And do tell me if you want the complete coverage of the report, or should I cover this report near to the examination if it is again in news. Otherwise, the basic points I have discussed with you, I have provided to you. Okay, so thank you very much everyone.